I'm David Beadle. Here's what's happening from RateAlertNow.com. 30-year mortgage rates moved lower again this past week because of increasingly aggressive verbal attacks on Wall Street emanating from the White House. When there is uncertainty in the air, investors often turn to the perceived safety of U.S. Treasury and mortgage-backed securities to protect their cash. As a result, home loan rates typically decline. The national average 30-year fixed-rate mortgage is now at 4 7/8% with 1 5/8 points, down a quarter of a point from a week earlier, for a savings of $250 on a $100,000 loan. The 5 1/8% rate is now at 3/8 of 1 point, also down a quarter of a point from January 15th. Remember, 1 point is worth 1% of the loan amount. This means 1 point is $1,000 on a $100,000 loan and $2,000 on a $200,000 loan. When it comes to a 2-point loan, that represents 2% of the loan amount. This means 2 points is $2,000 on a $100,000 loan and $4,000 on a $200,000 loan. The national average 15-year fixed-rate mortgage was also down a quarter of 1 point, with the 4 1/4% rate now at 1 1/2 points. The 4 1/2% rate is now at just 1/8 of 1 point. In order for you to know when to lock your floating fixed-rate mortgage, you have to have an early warning system with immediate news on changes in current rates and points before they occur throughout each and every business day. That's where my Rate Alert Now service becomes essential to your rate lock strategy. I'll tell you via regular email and or mobile text messaging when current rates are about to go up. And if you act quickly, you may be able to reach your local mortgage originator by phone to lock your rate before the mortgage company becomes aware of what's going on and changes its rates. The cost of my service is less than $1 a day. This week, Wall Street will watch to see if current Fed Chairman Ben Bernanke will be approved for another 4-year term in that position. A U.S. Senate confirmation vote is expected. There has been substantial opposition from both Democrats and Republicans who are angry that Bernanke created $1.5 trillion in new cash out of thin air last year without prior approval of that sum by Congress. Insofar as data are concerned, Monday will feature December existing home sales, and Tuesday will see the January Consumer Confidence Index. On Wednesday, it's time for the Federal Reserve's latest announcement on interest rates, while Thursday will be all about weekly jobless claims. Friday is when we learn how well the economy did during the October through December period with the release of the gross domestic product numbers. That's what's happening. I'm David Beadle. For full details on my real-time mortgage rate alert service to help you beat the system, visit RateAlertNow.com. And check back here on Monday morning for my next free mortgage rate update.